Hi there. What happened to the crypto market is just the beginning. Over the past couple of weeks, I've been sharing in different sessions that the downside risk is getting higher and higher. And it's not just among a few of crypto, but many more. But a lot of people didn't believe it and they're just basically denying it. And a lot of them have wrong focus. They're just thinking to guess the top and maybe also guessing the bottom as well. But what happens here leads me to try to share with you in this video three things at least I want you to take away, trying to help you to understand better the true nature of crypto. So what are they actually? Besides crypto, like if you think them as a whole, it's not the way to think about it as well, because Bitcoin itself is something different. Not that it has nothing in common with the other altcoins, but let's get into the nature of them. The altcoins are mainly like startup in nature, and startup basically 80 or 90% fails in the end, and there are actually a lot of examples that altcoin crypto projects fails and they just go flat in price. I believe you know all those. And they are not something like listed companies with very long history. The longest crypto project, even Bitcoin, started only around 2009, and that means they have only like 6 years or 16 years of experience, or like that network is basically only running for that long. And even if there are companies or project teams working behind a certain network, it doesn't mean that they will be there forever. Once they lose the support of the community, and more importantly they lose funding, that's when they can go out of the business. So that's the very risky part of whatever crypto projects that we are supporting. So that's the very first important nature of it. And then their vulnerability to attacks. This one, even Bitcoin, is not 100% foolproof. So let's say a couple of examples. One, the hardware that runs the nodes for the networks. So that can be one source or one point that can be attacked. The other is the physical location that runs these nodes. So if there are any attack to the power grid, or even the network in that particular area, that can create disruptions to those networks as well. Not to mention there are other risks that we don't know, because we all know blockchain is based on cryptography. So many people already mentioned like quantum computing or all the others. Only cryptographers or experts in those areas can tell what exactly are the risks with each project. So the reason I'm raising these is not to scare you, but just to share between us that these risks do exist. Cryptos are not risk-free. So risk when it comes to investing or speculating, that's something we have to factor into the price. So as simple as that. And after that, the second one is the myth about institutions buy-in. A lot of people believe in that because of institution buy-in, crypto price will never go back to the previous lows. However, the event that just happened a couple of hours back proved that this is just not the case. The price can dip so deep that any historical price can even be breached. So if you look at some altcoins, they have gone to the level that was supposed to be its lowest since 2020 or 21. And let me ask a few more questions just to clarify or strengthen the idea that this myth is basically wrong. So, are institutions going to love a crypto project like you and me and be diamond hands willing to hold it for, I don't know, a few years or maybe even 10 years? They won't, right? As soon as they think they're going to take a loss, and when it hits their margin of loss that they are willing to take, they just cut it, right? So they won't be diamond hands. And then the second question, are institutions smarter and have better access to information than us? Absolutely yes, right? Unless you've got some very special insider relationships. Otherwise, they have much better resources and a lot more bigger teams than us individuals. And then the third one is, are institutions faster than us when it comes to putting in either buy or sell orders, and do they have better hedging tools than us? Both yes, I believe, right? Even if you are an experienced trader, you have access to some of the nicer trading platforms. The institutions that have the capital, they invest in both network and software solutions that has minimal processing time or minimal latency that would be much faster than us just by going through the retail internet network. We are already slower than them. They have their dedicated network, their own private lines. So just a couple of examples, but there are way lot more. So just to have these in mind whenever there are people preaching to you about that particular myth, pay attention, and like that's actually ringing an alarm bell. And is it only positive? It doesn't sound like to me, right? They can buy and they can sell. That means the price won't only go up, and they can absolutely go back to where they were. So what's next? Today's incident is only just the beginning. What worries me is this, that people aren't only panicking about the tariff, is actually why this tariff has been announced. So basically the big countries are still fighting on different turfs, and it's not over yet as people have in mind. So remember the beginning of the year when the tariffs thing first got announced, and then like after a couple of weeks when all those negotiations and behind the scenes things happened, after that the published list gone out and people think, oh yeah, let's go party and it's time to trade again, right? It seems that, or it has been proven that that's not the case. It's not back to business as usual. So that's the part that worries me. If this continues, or if people are worried about being uncertain about the future, like the uncertainty is what's killing the bullish sentiment of investing or speculating, no matter whether it's crypto or other assets. As long as they are riskier than the lower beta assets, then that's the problem. And I believe a lot of people have forgotten about this. This was Bitcoin back in 2022 and 23. What happened back then was a 490 days of accumulation cycle according to the Wyckoff method. So from June 2022 to October 2023, Bitcoin price was staying at a very low point. Not until after 490 days that it started to climb and return to the 2024 buying climax. I hope what happened just like few hours back wouldn't trigger such a long-term accumulation cycle. If that's the case, the money will definitely go somewhere else. Okay, have this in mind. That's a risk that we have to face. Of course, what's next after this is, if you want to continue to listen to this guy over here with 25 years of banking and fintech experience and being a certified fraud examiner, and won't promote you any crypto projects, if that happens, you're not going to trust me, because I already mentioned in the very beginning, crypto projects are like startups. 80 to 90% of them will fail. That's why even if I promote you, do not trust it. I will disclose to you if I got involved into any crypto projects, but not for the reason of promoting that project, just to disclose any conflict of interest if I'm going to talk about those particular projects. Okay? Clear? So thanks for joining me, and you know what to do if you want to continue to listen to this guy over here. See you in future live sessions. Thanks for joining me. Bye.